Thank you for staying tuned. Well, let's get the views of analysts at AfriInvest on some of the issues raised by the finance minister during her visit to the Nigerian Stock Exchange. Well, Biodu Keripe, head of investment research at AfriInvest, will be having that conversation with Temple at the exchange.
Very much, Chimaze. So, Biodun, thanks a great deal for joining us on the show this morning. Really good to have you back, from AfriInvest. Yeah. So, let's look at these comments made by the Minister of Finance and, of course, Budget and Planning, Dr. Zainab Ahmed. Now, she talked about incentives for the capital market. What's your reaction to what she has said in essence? I know that the finance bill has actually made some provision, or Finance Act has actually made some provision around transaction charges and some other initiatives like that. But in the market community, what's our folks saying and what is your impression?
So thank you. I think our comments basically just sort of still reiterate some of the incentives that have been embedded in the Finance Act 2020, which for market participants or for the market community at large, they sort of need to take some time out to look at the details of those incentives and exemptions and see how it could sort of benefit them. It's focused more actually on the transaction side. Now, let's step back a bit really. Before now, we've had a couple of incentives really for the capital market. So first of all is the exemption of government bonds, interest paid on those bonds from company income taxes. So where you have government issue bonds, corporate issue bonds, government agencies issue bonds, interest on those bonds are exempted from company taxes basically. So another one is exemption of capital gain taxes on trading of shares and securities in the capital market. So that's why when you transfer shares, when you sell your shares, you don't get to pay any form of CGT, capital gain tax, on that transaction. Lastly is the stamp duty, even though that expired actually around July 2019, but stamp duty is on transactions from NSC payable to the CSCS or the Securities and Exchange Commission. Is actually an exemption. And point to notice that, or to mention that on the company income tax side for government bonds and corporate bonds that have been issued, there is actually also an expiration there. So there is a 2020 deadline for that exemption to expire. However, it will continue for government-issued bonds. So there will still be exemption on CIT for government-issued bonds. Now, speaking to the Finance Act 2020 itself, there are possibly about four key areas where it tends to want to benefit the capital market. So the first one will be in terms of where we see high excess dividend taxes. So that if it sort of addresses that, where we have securities lending transaction, there are a couple of incentives for that, and that is, of course, it fits into the need to improve or to drive securities lending activity in the Nigerian capital market. And if you recall, the stock exchange has been somewhat all out on securities lending. Recently, they sort of fine-tuned and tuned up some of the policies and framework that guides that activity. That is one. Also, thirdly, there's business reorganization. So where you have a business reorganization and you possibly would have suffered a couple of double taxes, that also has been addressed by the Finance Act. We have the focus also on the unit trust scheme, where there are activities in unit trust scheme. There's also an incentive there. And lastly, where we have the real estate investment trust scheme, also there are incentives. So to just speak a bit into details about the incentives, looking at securities lending, for instance, some specific incentive is that normally in the eyes of the taxman, it just looks at the legal form of every transaction in the securities lending. So where a lender is borrowing out his stocks or his shares to a borrower, or is lending out his shares or stocks to a borrower, that movement there will be taxed. And then where it is being returned back to the lender, there are withholding taxes that also apply. Now, that is being addressed by the Finance Act
That's
2020.
a sort of horizontal tax.
Exactly. So now it just sort of looks at the economic substance behind those transactions rather than the legal form of the transaction. So the withholding taxes would then apply at the end of those transactions, where the borrower then returns the borrowed shares or securities to the lender, and that's when you have withholding taxes applying. Also, dividends and interest that accrue from that transaction will no longer be taxed along the line. It will only be taxed when it settles in the hand of the lender at the end of the day. So those are some of the key incentives for securities lending, which should be a positive driver for some of our market participants and major market dealers who have been appointed and authorized by the Nigerian Stock Exchange to sort of engage and carry out this activity. To mention also, for business reorganization also, typically in a business reorganization, transaction or activity, there are movement of assets, either capital assets relating to shares for the sake of reorganizing the business. Now, do not forget that the business is still owned by one single entity. Exactly. It is just carrying out a sort of reorganization to just fine-tune its process. So there is no need for that single entity to suffer taxes at every point where there is a movement of asset from one point to the other, which could be in the form of capital gain taxes or withholding taxes on those transactions. So it will just focus more now on when those transactions are concluded, and then it settles in the book of the final order, and then there's just one single taxation. So broadly speaking, we can just say the Finance Act 2020 sort of want to address the issue of double taxation across some key capital market activity or transactions, securities lending, real estate investment scheme, business reorganization, unit trust scheme, and of course itself, where you have the excess dividend tax issue. So I think regionally that's what the Minister of Finance has come in to sort of reiterate for the capital market. And she also mentioned that they will be looking at new incentives.
Exactly. Which brings me to the next question. What are the new incentives that operators, traders here, are expecting in the market?
So it is really tough to call right now. But one area they possibly might also be looking at will be maybe in terms of transaction fees as regards to listing transactions.
Because I know that the Securities and Exchange Commission has from time to time, mentioned that at the different fora that they held that they're going to, revisit that particular part of the capital market. Because again, it looks like this is something that has prevented a lot of companies that wanted to get listed in the market, from coming on board. And it also limits the representation of the various sectors of the economy, in the market. So I know that the investors have been talking about that as well. Do you think there will be some kind of forum, because the federal government looks to hold, get this done in collaboration with the NSC, the SEC, and other SROs in the market? But do you think we should have a forum to address some of these issues before even we hear from the federal government?
So to start with, I'm really not very bullish in terms of new incentives that we should be expecting. So I would not be I would be very cautious around organizing forums and engagement meetings or sessions to integrate capital market or participants with what the government aims to do. Already, I feel there's a substantial a lot from the Finance Act, which maybe to an extent, even the stock exchange actually organized a symposium sometimes earlier this year, where they sort of engage the market, the broker community and investors, trying to make them understand some of the benefits and incentives from the Finance Act. So I think, speaking to that, maybe a little bit more on that. But I'll just still be a little bit not too bullish on what to expect in terms of new incentives, because to start with, even the ones being introduced in the Finance Act, I don't think the market is even yet taking maximum benefit of those incentives.
Because the securities lending isn't something that has actually come into effect.
Exactly.
Okay, I know that some shareholders, perhaps retail investors now, have also raised concerns around some of these transaction charges that you have in the market. If you're buying, if you're looking at the buy side of shares, you pay NSE fees, you pay SEC fees, you pay CSCS fees, and you pay the commission and stamp duty and all of that. All of that comes in different columns and rows. And when the breakdown happens, if you put like ₦1 million on a share worth some 8 naira, 85 kobo, at the end of the day, you could build some 13,000 naira plus. And this is coming from retail investors. They've complained that, look, inflation is out there, is really biting hard on us. There is really no room to actually lend at a lower rates, enough to, inject in the markets and see how you can then so this is a major concern. Do you see anything being done to this eventually?
Really, it's sort of quite unfortunate for the market, the investors at large, particularly given the fact that the capital markets over the last 2, 3, even 4, 5 years has not really delivered superior returns, which would have compensated investors for whatever transaction charges they possibly suffer, whatever waiting period they've had to hold on to their investment, But looking at this cost from a percentage or relative perspective, all in all, I think that cost is probably less than 5%. When you're doing your buy and your sell put together, the total cost is less than 5%. I mean, if you compare that with what is obtainable across global exchanges, be it in SSA region and other advanced market, you see that these fees are relatively competitive. And while there is room really for the NSC, the SEC, and the CSCS to sort of possibly tweak, lower the cost of transacting or trading on the exchange, we should also give consideration to the fact that the NSE itself is nearing its full demutualization stage, which means on its own is becoming a single operating entity, which then means it has to start reporting profit and losses. It has shareholders that must report its operating performance too. So on one hand, it's also a business, and it also seeks to maintain its operating cost. In terms of percentage of employee it has to the Nigerian population, I can't put a figure to it because I don't know.
You're not a regulator.
But I know it's contributing its fair share to employment, to the labor market, basically. So it sort of still needs to keep its balance sheet strong and profitable. So they definitely just have to be a middle ground where we need to look for ways of encouraging local investors, encouraging local institutional investors to really come into the market and fill up the gap, really. I believe that there are rooms for improvement.
So let me just ask you this. What sort of incentives will then match this restructuring process or demutualization of the stock exchange eventually? Because I know that the securities lending is something that it looks like they're really ready to grab now and start, enforcing in the system.
It's tough for me to think of incentives from an NSE perspective right now. It's really tough for me to think of an incentive from them. I mean, they're very bullish on letting securities lending fly. I mean, it's actually operational, or it's in operation, just that the volumes are quite negligible. They're not so massive. So you're just looking for how to scale it up. And I think the incentives from the Finance Act allows for operators to then come in and we can then be able to see this scaling, this upward scaling that the NSE looks forward to.
Is there any way this incentive discourse will impact on listed companies eventually?
So maybe not really on listed companies. I mean, I don't see the nexus or the relationship between these incentives and listed companies. For listed companies, their own link with the stock exchanges in terms of if at all they aim to do capital raise, and then the cost of doing that capital raise which is what I think we earlier touched
issues
on.
Generally,
issues
generally. The primary side of the market.
Exactly. So,
because I know that is another key area that the Association of Issuing Houses of Nigeria have actually raised. That we need to, if we really need to have more issues in the market, why don't you, cut down the cost of doing all of these things, including listings and all that.
So I think that's one angle where the exchange might just be looking at, but which is what we just said, that may be one area we would be expecting the minister to sort of sit down with the SEC, have a conversation with them, and then deliberate on how they can bring down some of these transaction costs with respect to listing, IPOs, rights issues, and what have you. So I think that's just the relationship where I see it feeding into listed companies at the moment.
So in light of this discussion as well, what do you think will be going through the minds of pension fund custodians, administrators, who also participate in this side of the market? Because you mentioned REITs earlier. I know that there was a time that they had a conversation around the double taxation on REITs. That because again, pension funds have already been taxed. Do you think that these guys will also be expecting more, knowing that the Finance Act has already addressed this issue of horizontal taxation?
They possibly be expecting more, but what more really would they be expecting? So as it is for the PFAs, the major nexus for them with the capital market is in terms of the exposure to the capital market, which in recent times has been very sticky at around the 5, 6, 7%
eventual
range of their total PFA assets, and has not really increased significantly for a while.
So I understand we're actually running out of time, but Abiodun Kerikwe, thanks a great deal for showing up and of course addressing all of these issues for us on the program today. Back to you now, Chimeze.
Thank you, Temple. Well, let's do an opening call to the debt and currency market with Chioma Udu, fixed income dealer with GT Bank. She joins us from the FMDQ market, please. Hello, Chioma. Good afternoon. Oh, good morning. Well, Chioma, good morning. Now, could you recap the activities of yesterday at the fixed income market, and what were the major factors that drove investor sentiment there?
The major factors that drove the sentiment in the fixed income markets is the liquidity we have in the system. The liquidity opened yesterday up about 600 billion. So what we basically saw was a liquidity play. We saw a lot of bullish bias. We saw a bullish bias across the fixed income curve.
Market trading, the system's liquidity for today.
Well, we expect that the liquidity play is going to continue. We also expect about 1 trillion to come into the system tomorrow, which is the OMO maturity. We've seen the FAC come into the system. We've seen coupon payments. As a result of that, rates in the money markets have traded at 2%. There's persistent bullish bias across the curve. But until the liquidity thins out, we don't expect that rates are going to go up any higher than one is trading right now.
Treasury bill auction today, what are your expectations, and how would that drive the yield curve for the rest of the week?
We have a primary auction today. 111 billion is on offer. It's basically a rollover or a retap, as you may say. Rates are currently at 3 to 6% in the market. We expect the rate to come out as current market rate, which is 3 on the 91 days or short tenor, and about 4 at the mid tenor, and then 6% at the long end of the curve, of the T-bills curve. We expect that rates are going to close at the same rates that is trading now, and then we expect that there's going to be a lot of interest at the auction because of the liquidity we have in the system.
All right, thank you for your time. Chioma Udu, fixed income dealer with GT Bank. After the break, we do an opening call to the Nigerian Stock Exchange as well as London. To stay with us.